This segment is sponsored by Strategic Wealth Designers. Most people plan for retirement the wrong way, but it's not their fault. So here to break down the basics of retirement planning the way it should have been explained all along is Thomas Riley, a senior financial advisor at Strategic Wealth Designers. Thanks for joining us. Great to see you.
Thanks for having me. Great seeing you again, too.
Yeah, of course. Well, Thomas, of course, there has been a lot of global tension and market volatility. So when savers and investors see headlines like this, what's the first thing that they should keep in mind?
Yeah, so this is something that people hear all the time when it comes to investing, but really keeping in mind the kind of big picture and the longer time frame. Sometimes when things happen, from the headlines and you see extra market volatility, people make emotional decisions. It can actually hurt them in the long term. So I always say take a step back first and then kind of assess the situation and what's happening with your retirement plan.
Yeah, good advice. When geopolitical events shape markets, many worry about their retirement savings. Should they be making changes during moments like this?
Yeah, so that's a really great question. It's actually really important to think about too. I think a lot of times, if you're younger and you still have 20, 30 years from retirement, really try to stay away from, looking at those headlines and making immediate changes. But lots of times we do what's called stress testing on people's portfolios. And so if you're feeling really uneasy with the volatility or the market risk, that could be a sign if you are close to retirement that you may want to make some adjustments. Because again, if there are larger market volatility or a bigger downturn, you could be carrying a little bit more risk than your comfort level. So it can be a good time to reflect, but also making sure that things are lined up with where you want to be at from a risk standpoint.
Sure, great time to assess. And of course, markets have gone through wars and crises and global conflicts before. What does history tell us about how markets respond?
Yeah, so this is important too. So if you look at, the past decades of all the, pretty much knowledge that we have and all the research between geopolitical tensions and big events happening, most times what we'll see is more volatility within the first few weeks or the first few months. But over a 12-month span, we usually see normal market returns. So that's, again, kind of keeping in mind that long picture to where it can see a little bit more volatility. But historically, we've seen normal market returns, not always, but most of the times after a big event happens.
Yeah, that's reassuring. And with so much uncertainty in the headlines, many may not know how these global events affect their retirement plans. How can people get educated about this and better understand what it means for their own situation?
Yeah, so they can come to one of our classes, Retirement Planning University at Georgetown or George Mason. We talk a lot about risk, and we even talk about things like stress testing the portfolio, which can give you a lot more clarity and confidence for where you're sitting at and, how things can affect your plan as well.
Yeah, great to know. Thank you so much, Thomas.
Thank you so much for having me.
Sure. For more in-depth retirement education, visit retirementplanninguniversity.com. That's where you can sign up for classes happening in the DMV every month.